This Week in Startups is brought to you by Walker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at walkercorporatelaw.com. And WordPress.com. Right now, WordPress is offering you 15% off any new plan purchase. To create your small business website today, visit wordpress.com/twist.
Welcome to The Art and the Science. I'm Gabe Turner, Executive Director of the Draper Venture Network. So now we're gonna jump in. And so the first panel is a fireside chat on a topic that's certainly been making headlines. It's been making heads scratch, which is, the price of Bitcoin skyrocketed, 500% this year. Startups may raise more money on ICOs than they did on from VCs in 2017. This morning, my Uber driver pitched me on his ICO. Okay, so I think you get the picture. But one of the more successful and really legitimate companies to come out of this surge of crypto has been our very own portfolio company, Coinbase, which is a digital wallet and a transaction platform. And so I'd like to invite Coinbase's CEO, Brian Armstrong, who will be joining conversation with our own artist and doctor in residence, or scientist rather, Tim Draper. And it'll be moderated by our good friend, Jason Calacanis. So please give them a more warm welcome.
Okay, good morning, everybody. Good morning. You're in for a real treat because we're going to talk about some of the hottest, They always say, never work with pets, no animals, no kids,
and no
Tim Draper, because they will always show you up. Look at this. Hey, Brian, how are you?
I'm great. Thanks for having me.
It's great to see you. You started talking about Bitcoin and cryptocurrency in about 2012, if I remember correctly. You and I were on Hacker News and other places talking about it.
Yeah.
And people thought you were crazy. You leaned into it. And your first project, if I remember correctly, was you wanted people to watch a video and get paid a fraction of a Bitcoin to watch the video. This idea, I think I saw ICO last week for $300 million. But wasn't this your first little stab at how cryptocurrency might touch the public?
Well, there was a lot of people in the early days that I wanted to get involved in digital currency because everybody did think I was crazy. And so I was just going around talking to anybody who would listen. And if they could do it on a video or in person or anything like that, I would send them a tiny bit of Bitcoin. And I probably sent a tenth of a Bitcoin to hundreds of people, which later have come back to me and been like, wow, this is a ton of money. So yeah. You got to when you're in early stages, you got to get out there and hustle and get traction any way you can.
But that idea, if that existed today, I was just thinking, this could be a revolutionary idea if people on YouTube were getting paid for their attention to some extent. And in fact, people are saying the next Facebook will be a cryptocurrency-based Facebook. Do you believe that?
Well, I'm not sure if it'll entirely replace Facebook, but I do love this idea that all user-generated content today has basically been incentivized by things like upvotes or like buttons or stars or followers. Or you could think of it as karma.
Or dopamine.
Dopamine addiction, yeah. I mean, even Wikipedia, right, is just people collaborating via karma. And so most of internet innovation has happened because of that, using that mechanism. And now a lot of internet innovation can probably happen with real monetary value being transferred. Every upvote on Reddit could be a bit of monetary value, and you could have people actually earning a living on Reddit all day long, moderating or submitting comment or answering questions. So that is a pretty exciting trend that could happen.
Tim, you immediately, when you find a new technology, assume, and I think this is probably your superpower if you did have one as an investor. It's been pretty exciting to watch. Your default state is to believe or imagine that the technology will succeed. This gets you into trouble, and this also gets you to the point where when Mt. Gox, famously the store of a bunch of Bitcoins, I guess one of the first Bitcoin marketplaces, went under because they didn't know how to build the technology properly. You, for some reason, decided to put $20 million to work in an auction to buy coins that are now worth, I believe, 10 to 20 times that amount. This is a $20 million position that's now a $300 or $400 million position. Is that correct?
So,
or directionally correct?
The scientist in me says, yes, basically that is correct. The artist in me says this is a transformative opportunity. and to take it on was to drive it. Yes, I looked at it. I met Brian. I missed him the first time, but my son got him.
Yep.
And I saw the value, the excitement behind this, and I said, this is potentially transformative. It is going to probably disintermediate me and the venture capital business. It's probably going to transform anything financial. And then I believe before I even made the big purchase, I knew that the blockchain could be used as this perfect ledger, and that perfect ledger would make it so that my accounting bill would go to zero, and potentially my legal bill would go to zero, and potentially my tax bill would be dropped by 90%. Because I think that now with the blockchain, it's pretty clear in my mind that all those new technologies can govern us better, more effectively, and more globally
so
than
you bought
any of
into
these
this.
fiat governments.
You bought into this.
Yes, and I do that, and thank you for recognizing my, well, I wouldn't say it's a superhero trait, but it's like an optimistic trait.
Yeah.
That when I look at a new company, and you can pass this on to all your entrepreneurial friends, I am looking to see how high is up. How great can this be if it works? I'm not as concerned if there's a high likelihood of failure. That's okay with me.
Well, you actually know the exact amount of money you're going to lose in failure. But with the upside, as we've seen in many of your investments, whether it's Hotmail, Skype, Tesla, or the company before Tesla, what was it called before Tesla?
It was still Tesla.
Yeah.
Yeah.
These investments were insane things to back, so you knew how much you would lose, millions to tens of millions of dollars, but nobody could ever predict the size they got to. Almost everybody underestimates the upside. Is that right? The upside potential, at least?
Yes, because the world is bigger than people can fathom. And I think travel is great. And I think this kind of a meeting of people from all over the world is great, because people start to recognize how many people we really have. So if you have a new breakthrough idea, it can spread around the world faster than ever before. And it affects a lot of people, and it can be an enormous mission. And if you play your cards right along the way, you can really make an enormous change in the world. And
right. So you bought $20 million in Bitcoin at the Mt. Gox, and it became worth $300 or $400 million, and then you have over $1 billion in cryptocurrency holdings. Is that correct? It's a yes or no question.
The scientist in me will have to go back and research this question. And the artist in me says, I'm thrilled. I have money to invest in more entrepreneurs, more great things.
But I don't. Okay.
And progress will move forward. We'll cure cancer. We'll get off this planet. We'll make this planet a better place to live. It'll all be awesome.
All right. We'll take it as a yes and a yes. So, tell me, with Coinbase, and there's a lot of coins now. We got CoinList, Coinbase, and everybody's using the coin term.
Yeah.
You started this before the ICO craze. Now, I've been studying this, and I'm an angel investor, and I interview people, and I met the Tezos people and a bunch of different of these ICOs, and I thought, wow, these are people who are doing their first startup, largely in some cases. They've not written any lines of code. They have written a white paper. It's sometimes over 10 pages long. They're wonderful to read. Should we be giving those people over tens of millions to hundreds of millions of dollars, people without track records, with a white paper? Mm-hmm. And do you have a fear watching all these transactions occur that this ICO thing could wind up blowing up in the laps of everybody in the crypto community and then tarnishing it.
Mm-hmm.
So is it a scam, and are you worried about the potential cratering of it?
Yeah, so I do think the ICO craze is exactly that. It's a craze, it's a bubble, and it's a little out of control right now. I would not be surprised if in the next 6 months or 12 months there's some enforcement actions by the SEC. Some of these get slapped pretty hard, and there's a bit of a correction in the industry. And honestly, we're probably due for that. Digital currency has gone through 4 of these cycles now where there's a big run-up and a correction back, but it's at a new plateau every time, and it kind of goes up and back and up and back. So the ICO trend underneath it, I think there's something real there, which is that there's a lot of people in the world who can't raise money easily. They can't get into a room like this in Silicon Valley or meet Tim Draper. And so
they can meet Tim, actually.
Yeah, well, he's
you just have to go to San Mateo. You'll meet Tim. He's kind of sitting in the front window of the Draper University.
Yeah, but I mean,
it's pretty accessible.
There are lots of people who don't know any investors. I remember actually when I moved to Silicon Valley, I didn't know a single person who identified as an investor or an angel investor. And so I had to apply to Y Combinator, and that's how I started to meet a few people. But many people don't have that opportunity, and so the ICO thing is real. That's going to help a lot of new ideas get funded. What's the real part?
Explain to us as entrepreneurs in the room and investors, what is the real part for you? When you look at it, what is the part that makes you excited and say this is a sustainable technological innovation that could change what?
Well, I think of it as 2 things. One is it's crowdfunding, and it's globally crowdfunding. So now if you're a kid in India with a great idea, you could actually have 17,000 people put in $50 all over the world in 30 minutes. Like that was never possible before. The legal paperwork was one reason. Like you never were going to be able to meet those people was another reason, and they could never get you the $50 without spending less than $50 is another reason. So that by itself is a great innovation.
The microtransaction, fluidity, global, do it all in what, Signal or Telegram chat room?
Yeah.
Where are they doing all these, in Signal or Telegram?
It's all over, yeah. Chat
all I know is I opened up
Reddit.
One of these and I had like 12 invites to give money to failed entrepreneurs or people I've never heard of.
Yeah.
A little scary.
Yeah, I mean.
And you said the second piece?
Well, the second piece is that there's people who are creating new protocols. Like the ones that I think are the most exciting are these kind of utility tokens, they call it, like Filecoin and Golem. And there are ways to essentially pay people for either storage or computing power all over the world. And it does make sense to me that those should have their own native token, just because it allows essentially the early adopters to turn them into evangelists. So it's a great way as an entrepreneur to create a network effect, gifting these tokens to the early people, and then they go spread the word for you. So that's a pretty cool innovation too.
Hey everybody, let me take a minute to thank my friend Scott Walker. Yes, he runs the Walker Corporate Law Group, and they are, as you know, if you've been a fan of this program, a boutique law firm, and they specialize in the representation of entrepreneurs and their startups. Yes, they are a great firm, and all their lawyers have decades of experience. There are no junior associates working at the Walker Corporate Law Group, so they're not going to get on the job training with your startup. No, they're experts. And they encourage fixed fees because they think billable hours, well, those reward inefficiency. Mergers and acquisitions, licensing agreements, terms of services, privacy policies, they do it all. And if you want to talk to the founder himself, Scott Ed Walker, you can call him directly, 415-979-9998. 415, that's San Francisco, 979-9998. Or you can email him, Scott at Walker Corporate Law, Scott at Walker Corporate Law, or visit walkercorporatelaw.com. And make sure when you talk to Scott, you tell him your Uncle Jason sent you. Okay, let's get back to this amazing episode.
Tim, you are one of the most risk-taking investors we've ever seen here in the Valley, and on a global basis. When you look at it, do you get concerned that the discipline we learned in the Bay Area, let's say specifically, of, okay, let's go to an incubator, accelerator, or a university in your case, let's do a seed round, a friends and family seed, angel, Series A, that taking all of those up until the D round and compressing them into one round on a document is a little bit too much fluidity? Or for you, do you think it's just like, screw it, everybody knows that they're going to lose their money or they have that great risk, and so if everybody's opting into it, they should be allowed to throw that $50 in? Where do you sit with this?
Well,
How do you reconcile it?
I do know that it was a big surprise for us when both Tezos and Bancor raised more than $100 million each, and now they're worth 600 or 700 in Tezos and maybe 200 in Bancor.
Because of the appreciation of the underlying currencies, which they did not sell.
Right, and the excitement around the two.
Yeah.
And so we did have a serious discussion saying, well, I've seen money destroy companies because if they get too much money right away, they think I'll hire all my friends, I'll throw a few parties, and just if there's a problem, just throw money at it. Well, that isn't the way great companies get built. They get built a little at a time, and so our discussion in both those cases was take a bunch of that money and just say, that's our endowment. And that's what we're going to be using to make sure that this coin is there for you forever. And then take just a certain amount per year and use that to build the coin and make it awesome. And so it's very interesting because when people say describe an ICO to me, I say, well, okay, the artist in me says, okay, if you've got a mission of some sort, you now have 3 vehicles to go after that mission. It used to be that you could start a for-profit business that's profitable and grows and spreads that way. You could start a nonprofit business that is for the good of society, and you need to make sure it's sustainable so it grows and spreads to society. And now you can do an ICO. It's a different thing. And what you're investing in is not the company. You're investing in a coin. Or you're not investing, you're buying a coin. And by buying that coin, you are either getting behind the mission, getting behind the movement of that group, and hoping that the movement becomes so big that maybe that coin becomes more valuable, or maybe you're just enthusiastic about the mission. And for an entrepreneur, yes, it's a great way to raise money currently. The individual investor has been cut out completely out of the growth of the early stage for the last 15 years.
Yeah, since the dot-com bust.
Yeah, because going public now the companies have to be worth $5 or $10 billion before anybody ever want to take them public, except for some SPACs, which we are innovating on.
Yeah.
And if companies if it's that late in the game, then the public doesn't get to participate in the growth and the variability and the drive of all of this entrepreneurial excitement. They were looking for a vehicle to participate in.
And that's what this pent-up demand shows.
And that was pent-up demand, and they all came into these ICOs, and now they're making money on the ICOs, and now they're potentially losing their minds. But at some point, they are doing what they were cut out to do. And all our regulations have made it very difficult for companies to go public. They've made it very difficult if you had $20 and you walked into B of A or Wells Fargo and said, I want to open an account, they would say, no, we don't want you.
Yeah.
Because it's going to cost us $200 a year just to regulate your account.
Right.
So all that regulation, all that stuff that our government has put in there to protect us has really created more poverty than any,
scams would.
Anything else.
Yeah.
It's really, poverty is created by heavy regulation and governments that think they know better than the individual.
Should we just get rid of the concept of accredited versus non-accredited investors here in the United States? Other countries don't have this. And if you were a professor at Stanford making $150,000 a year teaching, I don't know, economics, you would not be able to invest in private companies. Like literally the professor who was teaching you how to be a wealth manager or Econ 101 cannot be an accredited investor. How does this make any sense?
And here are the people that are really interested in doing this? Young people who don't have a lot of money, but they want to take chances.
And that's
those
the
are
time
the
to
people
do it.
that they're keeping down.
Right.
But the way they keep them down is by saying, well, we're protecting widows and orphans.
Right.
And I'm not sure that it is a good idea. I think people need to be really well educated. Like, let's do everything we can to make sure everybody's really well educated. And then let's let them go ahead and make the mistakes and do the things and take the risks that they should be taking when they're early in their careers.
Yeah, I mean, what if we had them go to the SEC website and take a test and take a course? And for a $50 course, and 8 hours, you complete the course, and all of a sudden now you're certified to invest in whatever you want.
That is a good idea.
Why don't we work on it?
I'm going to send that to one of my friends at the SEC.
Let's do that.
That is
Don't CC
great. I won't copy.
I don't want to be on the radar. Or if it's a good idea, I'll take it. Hey, Brian, you've had 40...
But Jason, don't live in fear.
I don't.
Fear is the mind killer.
It is the mind killer, isn't it?
Yeah.
Yeah. You weren't scared when you drove in that first P1 Tesla on the 280 and with the 5-point harness on?
No, I was excited. It was like being on a roller coaster.
That thing was a death trap.
It was so cool.
No airbags.
It was kind of falling apart at that time.
It was a metal frame.
It wasn't a Tesla, actually. It was an Ian Wright.
Yeah.
The Wright mobile.
Yeah.
And it was amazing.
It's like, let's take a ride. It can go like 100 miles an hour in 6 seconds. I said pass.
Right. And you passed?
It looked like it was made out of like a shower curtain bar.
I know, but at least he strapped me in with a 5-point belt. And it was
wrong.
And
yeah, the problem with the belt is the entire frame was coming apart and put together with crazy glue. Hey, Brian, you have $40 billion in transactions to date on the system. Is that right? Or what's the latest number?
Yeah, something around there.
How much, what's the total value of the holdings? You hold the asset, correct?
Yeah, we do store digital currency on behalf of our customers. That turns out to be a difficult thing for people to do securely, so we try to provide that as a service.
A lot of people tell me this is a really bad idea to put your currency in a server, whether yours or on competitors.
Yeah.
That you should put it on a stick and then split the stick and put it in 2 different locations.
Yeah.
Which is the better idea?
Well, there's not one that's better. I think there's a substantial group of people out there who want both. So I think of it this way. There's a subset of people who they're a little bit tech savvy, right? They want to have full control, and they want to be able to store their own private keys. And that's how they feel like they're in full control of their money. I totally get that, and we actually have another product called Toshi, which is a user-controlled wallet, which allows people to do that. There's a whole other large category of people, I'd probably say it's a larger group actually, that doesn't trust themselves to store it that securely.
Got it.
And this is why, use Gmail for email instead of running your own email server.
Yeah, but Gmail's not all of my money.
It's true.
Right. So where do you keep your money? Do you keep it in? Which one do you keep it in? And which one would you tell your mom or dad or brother or sister or son or daughter to keep it? How would you advise your close family members, and how do you yourself keep your currency?
Well, I have all my digital currency stored in Coinbase. But as I mentioned, we have some products that allow you to store it yourself too. I test them all, but I'd say I have the majority of it stored on Coinbase servers.
We got a little bit of a Know Your Buyer Silicon Valley edition going on right now with, in some cases, the Russians or Saudi Arabia or other countries being very active and wanting access to the asset class here, ostensibly to make money, but it could be for other reasons. I guess people are speculating. I don't know if I buy that. Do you know who your buyers are? Do you care? Is it your business to know?
Yeah, so for better or worse, I mean, Coinbase is a very regulated business. Some of the things that Tim was mentioning, I mean, we are regulated as a money transmitter in all the states of the United States. We also have a BIT license in New York. We have an e-money license in Europe. We're registered as a money service business at the federal level. So in any 2 or 3 month period, we have some auditor on site from some regulator coming to check us out. So one of the requirements of that is that we do know our customer. And so people are not anonymous on Coinbase. And the way I think of this is that exchanges like Coinbase, where you can convert fiat currency or local currency into and out of digital currency, those are going to be regulated. But the crypto to crypto world, that's where people are largely operating unregulated today, kind of like, you can imagine.
Which is where the ICOs live.
Yeah,
Crypto to crypto. So that's just peer-to-peer. It's like Kazaa. It's like Napster.
Yeah.
It's actually even less like those because those had a central company or a brand publishing it. It would be more like Nutella, I guess back in the day where it was just an open source project, anybody could make a client or a server.
Yeah, it's like SMTP underlying email or TCP/IP underlying the internet or something like that.
Yes, WordPress. We are so excited that WordPress is the home of thisweekinstartups.com and my long-running blog at calacanis.com. You can use WordPress every day just like us, whether you're looking to create a personal blog, a business site, or both. WordPress will help you find, remember you, your customers, and connect with you. Your business needs an online home. It needs a WordPress.com website. You don't need any experience setting up a website to use WordPress. They guide you through the whole process from start to finish. And they take care of all the technical stuff. It's easy to get your site up and running. It's super easy. And they have a customer support team that is made up of WordPress experts. They're eager to help you and eager to help you build your site. It's available 24 hours a day, Monday through Friday, and even on the weekends when you're doing your side hustle. Plans start at just $4 a month. That is ridiculous. Only $4 a month for WordPress? Amazing. All WordPress plans include a custom domain for the life of the plan. Come see why 28% of all websites run on WordPress. Yes, 28% of all websites in the world, in the universe, the known universe at least, run on WordPress. I love WordPress. I've been using it for decades. It's amazing. So here is your call to action. Get started today with 15% off any new plan purchase. Go to wordpress.com/twist, wordpress.com/twist to create your website and find the plan that's right for you. That's wordpress.com/twist for 15% off your brand new website. wordpress.com/twist. Okay, let's get back to this amazing episode.
Tim, when will this move from being a money store, a geek hobby, and a fundraising tool to having some other practical use in the world? Because we were sitting here, 5 years ago, talking about it 4 years ago, and some cafe decided to let you buy coffee with Bitcoin. I'm hoping they never transfer that Bitcoin out into cash, because the discussion then was, well, what if Bitcoin drops? Mm-hmm. It was at $6 back then when they started taking it. So if they didn't, every 2 cups of coffee would be worth $7,000 right now. Just to put it all in context.
Yeah.
Do you see, will it move past a money store, a transfer, financial tool, and does it need to, Tim? Or is this enough? Because this seems to be enough.
I actually look at it as a great store of value, but it also, I suspect, people say, are you going to sell your Bitcoin? And I think, well, wait, no, that's my currency. And so my plan is to one day spend it or invest it. It's not to sell it, because every time I think about, should I sell it? Well, then what do I sell it into? I sell it into an old-fashioned fiat currency. It's like taking a dollar bill and turning it into shells from the old days.
Yeah.
And cigarettes in prison.
Yeah, cigarettes in prison. And I think
come in handy.
I think, wait, do I want a currency that is tied to some artificial landmass government that is getting more and more bloated and will probably collapse under its own weight? Or do I want something where I can move it from place to place, or I can go to another place and just pull it down? The other question you're asking is, can I spend it? And more places are taking it. Even Amazon's taking it in certain countries, and I think we are probably, in the US, are probably going to be the slowest to make it into a payment program, because in Africa, it's phone to phone, and they run it just like they run it in Pesa. What are the chances
the United States launches its own cryptocurrency in the next 10 years? Well, percentage-wise.
Who would care? It's still land-based.
But it would be backed by the dollar.
I mean, Aurora, they tried Aurora coin in Iceland, and that was a total disaster because the whole point is we're global. We're no longer international. We're global. Look around.
Yeah.
They're from all over the world.
What do you think, Brian?
I agree. There are governments that are looking at creating their own coins. I think Canada, China, we keep seeing headlines.
Putinville.
Yeah.
AKA Russia.
But I think I agree with Tim. It sort of defeats the purpose of a digital currency to me. It should be a global, decentralized thing. If it's tied to one country, I think the benefit of it is that it might have less volatility as a payment method in the short term.
If it marked to the dollar?
Yeah. But I kind of think that digital Bitcoin is getting less and less volatile every year. So in fact, it was less volatile than some fiat currencies last year, like the most volatile ones, the Venezuelan bolivar. But I think if you just play that trend out another 5 years, you're going to have digital currency be as stable as many fiat currencies in the world. And so having one tied to one government is actually not as good as having a global decentralized one.
The common belief, Brian, is that Bitcoin, because the miners are all in China getting free electricity at hydro dams and other places, even coal plants, et cetera, they have the majority of the compute power, and they will make the majority of the decisions. How does that impact the future of Bitcoin in your mind? That a bunch of marauding, essentially gangsters in China who are getting free electricity stolen from the government are controlling the currency that you've based your entire business on?
Well, I'm going to disagree with the premise of the question a little bit. I've met a number of these miners in China. They're legitimate businessmen from my point of view.
Stealing electricity from hydro dams?
The ones I met weren't stealing it.
Okay. Where are they getting it from?
Data centers.
Oh, okay.
Yeah. But I think to answer your question more broadly, so I mean, Bitcoin mining is a little bit too centralized right now. I would say that is a risk. I think there's other challenges in Bitcoin.
How many people equal that 50%?
One thing I want to say is that Ethereum actually is the most exciting answer here because they're working on proof of stake, which would actually eliminate mining, and I think there's a good chance that...
And Tezos too, and she may be in the audience.
Yeah, actually a number of digital currencies have made really good strides there. Ethereum wasn't even the first one, and so I think in a few years, most digital currency could be proof of stake and move away from mining, which would be great.
Tim, what are your thoughts? Is this an existential risk to Bitcoin? Is Bitcoin going to be the first person up the hill, but the Betamax ultimately, and that the value will move to Bitcoin Cash or Ethereum or Tezos?
Well, it's interesting that, as I understand it, the miners wanted us to all go toward Bitcoin Cash. And they had a concentrated effort to sell their Bitcoin and buy Bitcoin Cash on November 11th. And it kind of worked. Bitcoin Cash went up to about $1,000 and Bitcoin Cash dropped by about $1,000. Well, but it didn't really work because now they did everything they could, but I think it's just resilient. Bitcoin has been resilient to all these things. I thought when Mt. Gox went down, that was the end.
It felt like the end.
And but Bitcoin dropped about 10% in value. It didn't drop at all.
So,
I mean, it was so small. It was such a small drop. I thought, whoa, people really need this. And it seems to be resilient. People need this. And so it's just going to keep being there and keep spreading. And as it spreads, you have a network effect.
So we know every system that can be gamed will be gamed. If there's a financial incentive, then obviously there is even more reason to game the system, i.e. hacking for credit cards or any other crime. So this is a semi-anonymous, global, fluid currency. We've seen a ton of hacking occur. How much of Bitcoin's surge in price could be attributed potentially to manipulation, Brian?
I think.
And how manipulated is it as a currency? How many of the transactions are done to do what we just heard, drive cash up, Bitcoin down, and people try to manipulate it?
I mean, I think of those as having short-term effects. So in any given week or something, you might see something being manipulated on one exchange or something like that.
Yeah.
But the beauty of it is that Bitcoin is so big now. It's well over 100 billion market cap. So there's fewer and fewer people who can try to move the whole market, right? And as Tim pointed out with this example with Bitcoin Cash, the minute you try to do it, there's another contingent who wants to fight you the other direction. And so we have a maturing market on our hands.
Could those original owners, because the original owners of Bitcoin or the original miners have some large double-digit percentage in a small handful of accounts, could they conceivably create, and this is just a crazy scenario, but thousands of accounts over the last 5 years, move currency between them in order to manipulate it, and we would not know about it?
I don't think so. So one thing is that there is roughly 10% of Bitcoin is kind of locked up in the very early transactions, but the nice thing about the blockchain is you can see if they ever move, and those funds have never moved. So they definitely aren't using it to manipulate the market, but the question is, does anybody still control the keys to those? My guess is no, because they would have moved by now. It's an incredible amount of money, and I'm sure the very first computer they were using to do development work on Bitcoin, they would have moved the key at some point. And also, there's people like Hal Finney, who some people think was one of the people who worked on Bitcoin, who passed away. So my guess is that those funds are lost to the histories of time, and they'll never be recovered. But nobody can say for sure.
You're all in Ethereum now, and your Bitcoin love is faded? Is that fair to say?
I own Bitcoin, I own Ethereum, I own Litecoin.
Yeah, but you don't love Bitcoin anymore. You love Ethereum. I'm talking about love right now. I'm not talking about
love.
I'm not talking about history.
Okay, you're asking what my heart feels for Ethereum.
That's what I'm asking you about your heart. Yes.
I see.
I just noticed that's what you talk about.
Yeah. Well, I know that
that's who you
are
spend
right
time
in a
with.
way. So I think Bitcoin was my first true love, but it did break my heart a little bit.
Go ahead, tell us how.
Yeah. Well, so the reason why I got really passionate about Bitcoin and digital currency is that I want the world to have an open financial system. So kind of like the internet, this global thing where all payments are fast, cheap, and instant and global, and it'll bring about all this innovation and great things in the world. And Bitcoin, ended up not scaling to be that. Right now, it's ending up being a little bit more like digital gold. So people are using it to kind of flee in times of uncertainty, or to hold large amounts of it. But the transactions are too expensive on Bitcoin right now. And so what we're seeing is
I thought it was free.
No, the miner fees are increasing.
Yes.
So there was a scalability.
Explain that to people in the audience who may not understand this concept, because the public perception is, Bitcoin transactions are free. Explain the cost of a transaction fee and the miner clearing it.
Yeah, so there is an incentive that goes to the people who are keeping the network secure. These are the Bitcoin miners that are building out these data centers, or stealing electricity in some cases.
They house the ledgers and they do the processing power. Yeah.
So it's the people running the servers all over the world that are interconnected on this decentralized network. So I believe you could actually operate this even at Visa scale for maybe 2 to 3 orders of magnitude less than Visa is charging today. So it could be something on the order of 1 cent US or less to send every payment in the world. But
per payment?
Yeah.
Not for all the payments. Yeah.
Per payment. Yeah. And so that's where we need to get. Bitcoin right now only can do about 3 to 5 transactions a second. Visa does about 4,000 a second. So we've got a couple orders of magnitude to go. But I think other networks like Bitcoin Cash or Ethereum are all working on this. And so that vision is going to be realized, but it was a little frustrating to not see the original Bitcoin get there.
And Ethereum doesn't have this downside. And Tezos won't. Yeah. Right.
The scalability on Ethereum is today better than Bitcoin. It's actually doing about double the number of transactions per day as Bitcoin already. And their scaling plans, their roadmap, in my view, is much better.
Hey, Tim, let's talk about fund management and how this is all going to affect venture capital. You said before it's going to put you out of business. I don't buy that, but it would change the structure of how we do things. Most of the gains for LPs, limited partners who give guys like us money to go spend, and gals like us, money to spend, they make their money because they don't have the ability to liquidate. By not being able to liquidate, the hugest winners in the world, whether it's Uber, Google, Airbnb, Facebook, liquidating equals death. When you sell early, that's a disaster. Even at IPO, the people who held on to their venture investments in Google, Netflix, Amazon did tremendous afterwards. There was no better place to put the money. Would the ability to come in and out of funds early be actually a benefit to most LPs? Because that seems to be the number one answer.
Interesting question.
Like they don't know. If they did know, they would be doing what we do every day, which is picking companies.
There's more to liquidity, and you when things are tough, you do see how important that is. When things are going well, yes, it's always better to ride those winners and just just keep going. But when things are tough, cash is so important, and you need to pull that down. And if you've got a bunch of stock, you're saying, okay, will anybody take this off my hands?
It's okay, we'll get that GPS signal back.
And will anybody take this off my hands? And so I'm selling my position as an LP at like 20% of what the value could be.
Yeah.
So in great times, I think everybody holds, everybody rides. Yeah. It's great. They may make a few trades. I think liquidity does equal wealth. For a society, liquidity equals wealth. There is more. The more freedom you have, the wealthier the society. The more liquid any asset is, the wealthier the society. Tying up assets can make it so that fear can be exacerbated. And
so you've gotten those calls from LPs in your time as a VC when the markets are crashing and they're like, get me out of this position, or stop investing, don't do a capital call? They literally call you and say, don't do a capital call?
I usually say, I'll buy it.
Take you out of your position if you can't make the capital call. Yeah. Interesting. Hey, I noticed that some ambulance chasing law firms have taken action against Tezos. You don't speak for the company, but those people have probably doubled or tripled their money since they put it in.
Yeah.
Wouldn't an easy solution be to just give people their money back?
I think you have damage. You have to have a real damage in order to have a lawsuit.
It's like suing Facebook, a shareholder lawsuit against Facebook.
I think those are the, I hate to say it, but they're the innovative ambulance chasers.
Yeah.
They're the ones who say, well, we made all this money by buying one share of stock in each of these companies, and anyone that went down, we were able to do a class action lawsuit against. Now let's try the same thing with the ICOs. We'll buy one coin, but see, all these coins are going up currently.
Yeah.
So to launch a lawsuit before that makes really no sense.
Do you think these ICOs
Because if you've got a complaint with it, go sell it.
It makes no sense, right?
You'll make money, and there's no damage.
Right, like people were suing Facebook over some issues related to governance, and the stock went up and tripled in that time period. So why not just liquidate the stock and take your gain? It makes no sense.
Yeah, I mean, our court of law is usually pretty good about that, saying if there is no damage, then you have no cause.
Okay, for the entrepreneurs in the room who are all going, I took 150 meetings to raise $3 million. And I saw these dipshits that I went to college with who had no idea what they're doing, just raised $30 million in a non-dilutive ICO. Should they stop what they're doing immediately and do an ICO? Like literally a wise person would say, I am just going to stop everything I'm doing, and I'm going to stop working on my core product, and I'm going to take down that $30 million in non-dilutive financing. Why shouldn't every single company in the room, and you're the risk taker, why should they not stop working on their company and just do an ICO and take down 30 million? Tim Draper.
So I think here's the way I look at ICOs. I am very particular about which ones I will back. And they have to have that movement. They have to have that dynamism and the ability to spread. Otherwise, when things go bad and people need their cash, those ICOs won't be worth anything. So maybe they'll have some, but then they won't in whenever
But
the markets
if you can make it into
turn.
this room, by definition of being in this room, you're qualified, right? This is not an open event. Everybody here is qualified. So again, I'll ask, why shouldn't they do an ICO? You didn't answer the question.
Why shouldn't they?
Yeah, tell them if they should do it or not do it. Because that's what
Yeah,
what everybody's thinking,
as long
right?
as
Am I
you're
wrong?
following the
How
law.
many people are entrepreneurs in the room? Raise your hand if you're an entrepreneur. Okay, put your hand down if you haven't thought about an ICO. Or raise your hand if you've considered an ICO. All right, so 1/3 of the entrepreneurs have considered an IPO.
I've got an answer.
Go ahead, let's hear Brian's answer. You take a swing at
I
this.
think if it's legal, they maybe they should.
Okay, so
And
talk
it's
to
a
your
little-
attorneys.
And it's a little unclear at the moment, right? So I think this is what I would do. If I was starting
Explain the
a company-
unclear part.
Well,
What's unclear?
The regulatory environment.
mind.
Are you issuing a security, an unlicensed security, or are you doing something else?
Great, okay, now go ahead and tell us.
This is what I would do. If I had access to good investors, traditional investors, I would do that first, because starting a business is already super hard and risky. Like, why take another risk on top of it that the ICO thing blows up and you get a nasty gram from the SEC in the next 12 months, right? But if you don't have access to traditional investors, part of being an entrepreneur is being scrappy, and you beg, borrow, and steal, and you make something happen regardless, any way you can make it happen.
Yeah.
So then I would go do the ICO. And maybe in a couple of years, this will be all more clear, and like 90% of people will the ICO is the right route. But right now today, I'd go with traditional investors if you have access to it.
So if
Now I go one step further. I want the entrepreneur to have done the creative work that it takes to figure out a use for the coin, a specific use, so that when all is said and done, they actually have a purpose. There's a reason for this coin to exist, or a token. If you figured that whole cycle out, how people are going to buy them and how people are going to use them, I think then you've done the heavy work. And yes, and if it's something that will spread, I think then, yeah, it's worth it. And it can actually enhance your business by spreading customer value throughout the land. There are businesses that are already have a network effect that can take advantage of an ICO.
This does seem to be, to me, Brian, one of the fundamental shifts that people are not paying attention to, which is if there is an inherent value to the coin or the open source project, let's say, a developer working at Google making $250,000 a year, if they were to buy, a position of $10,000 in a coin and then work on it, and it were to accelerate, there would be an opportunity for them to work on an open source project and make much more money contributing as they go. What impact do you think long-term the greatest developers in the world creating currencies or participating in currency open source projects to ride up the value of their own holdings will have on technology?
I think that's a really great point. We haven't talked about that yet.
Yeah.
So this is one of the other innovations of ICOs is people working on protocols or foundational pieces of technology can now participate in the upside, not just the people building businesses on top of it. So if you look at the internet as an example, OpenSSL is this incredibly important technology. It keeps the entire internet secure. I think there was something like 3 or 5 maintainers of this protocol, and when the Heartbleed bug came out, it was like this messy code base nobody looked at, and the entire foundation of the internet is running on this thing. So Google and a few companies like that have been really kind of essentially donating engineering time to work on these fundamental protocols so they don't collapse. But the Ethereum and digital currency and ICO thing totally flips that on its head, because if you are working on protocols, you can now participate massively in the upside. So I think it's a huge boon for open source. I would agree with that.
It seems, Tim, that this could be like the fundamental shift that people are not expecting. Everybody's expecting the money store. Everybody's expecting money transfer. I don't think they're expecting developer transfer out of startups, out of Google to work on open source projects. Do you think that incentivizing these people, is there some way to pay people on an open source project for contributions with a coin? I've never heard of anybody doing that. Are you aware?
Oh yeah, that's happening a lot.
Yeah.
Oh yeah.
Paid salaries through the ICO proceeds, or distributed
they pay
coins?
with coin and salaries.
Got it.
They pay both, but
would that be the new thing?
coin has just sort of opened up a whole new liquid market. It's been pretty interesting to watch it all happen.
Yeah.
It's a wide open. I mean, there was clearly a lack of liquidity in the world. Based on the economic potential of the planet. And now there is a vehicle that that fills out that liquidity.
Okay.
And so I think a developer might say, hey, no, I'd rather work on this. Hey, it's a whole new protocol. It's a whole new thing.
Yeah.
There's 1,000 new things that can be done on this. And I think what's great about it is it's going after where the internet went after communications, information, gaming, whatever. Those were relatively big markets, but the enormous markets are now potentially challenged by the blockchain. The real estate, insurance, all finance, banking, investment banking, venture capital, and government, the biggest industry of all.
Okay, final question. You have to give an answer. No Tim Draper non-answers, okay? You have to give me a number here. 10 years from now, the price of Bitcoin. Take a minute. 10 years from now, we'll be back here. Whoever's closest wins, okay? There's no price is right. I'm going to give my number. You're going to give your numbers, okay? Who wants to go first? Tim, you ready? Brian, you ready? This gives me a huge advantage going last.
Okay,
10 years from now, the price of a Bitcoin.
Network effect. Okay, I'm thinking network effect is all the power of 2, right? Everything's squared. So we now have about 18 million wallets out there. In 10 years, we will have, let's just say we're going to have 1.8 billion wallets out there.
100x.
No.
Just like Facebook.
No. Squared.
Okay, 1.8 billion.
Squared.
Okay.
Okay, so I think we are looking at 10,000x on cryptocurrency. I don't know what the machinations are going to be. I don't know.
All right.
Bitcoin, who knows? But we are all, at least that many people are going to be using crypto instead of fiat. And I've said that in 5 years, I think people are going to be laughed out of Starbucks if they're trying to pay with like a dollar bill. Okay,
so Tim's answer is long, rambling, 10,000x for the entire space. Brian, maybe you and I could play the game. 10 years from now, what will the price of Bitcoin be? I'll take the under or the over. So we're in a 2-person bet, and we will bet it on a sushi omakase dinner. And
by the way, I think this little bet should be on a log scale. Okay. Which is much fairer.
Okay.
Because it's really explosive.
We're out of time.
3 years ago, I did predict 10,000 in 2018.
You're right. You're
pretty close.
Okay.
All
right.
I'm going to have a simpler answer. $100,000 Bitcoin.
$100,000 Bitcoin.
Yeah.
I'll take the under.
All right.
I'll take the under. Okay. Great time. And let's hear it for Brian and Tim Draper.
Thanks, Jason. That's great.